in 2025, a lot of people are looking for ways of investing in cryptocurrency without investing directly. And that's where the stock market can come into. Now, just before we go ahead, make sure you like, make sure you subscribe, and make sure you share. And a quick shout out to PodEdit. That's the company that do all my editing and all my post-production. So if you like what you're seeing, reach out to them. Right, let's get into it. So first of all, what is crypto or cryptocurrency? Cryptocurrency is a digital type of asset. So it's currency that's not controlled by any banks. So it's decentralized or any government. It means that you can't just print more of it if you want it because it's limited. And it also means that everything that you use on what's known as the blockchain, which is the system that records all the transactions, is transparent. So it's very difficult for people to actually get away with making changes on there. Now, part of the strength of the cryptocurrency can also be seen as the weakness, because there's no central control or central authority looking after it. It means that if there are issues, there's no one to go to with that. It also means that there is no protection against fraud, for example, in many cases. And it also means that in many cases, you have to pay capital gains tax. That's one of the main things. So unlike many assets like stocks and shares and bonds and so on, you can't buy cryptocurrency directly in an ISA. So what's the solution? I'm going to tell you right now. So first of all, we know what cryptocurrency is. It's a digital type of currency. It's decentralized, it's transparent, and it's also recorded on a public platform called the blockchain. So what you can do is to invest in cryptocurrency using the stock market. And why would you want to do this? First of all, the stock market falls under a centralized system controlled by the government. Now, why would you want to do that if the whole point of this cryptocurrency is to come away from that? And there are two main reasons. First of all, you have protection in case there are problems, which means that the FCA, the regulatory body in the United Kingdom, can get involved, or wherever you are in the world. And it also means that if you bought them in tax efficient wrappers such as the ISA or the SIP in the UK, or similar kind of things in the US, you'll actually be capital gains exempt or tax exempt in a lot of cases. So without talking too much, let's have a look at the three main ways you could buy crypto. The first way you can buy cryptocurrency, of course, is to buy directly through the exchanges. This will be through exchanges such as Coinbase or Kraken in the UK, and there are several others around the world. So with this, you can buy the actual crypto in your wallet, and you'll have access to that. You can do that wherever you want with it. The second way is to buy them inside what's known as ETFs or ETPs. So these are exchange traded funds or exchange traded products. Now, the difference between this and buying it directly is that, one, you don't actually own the crypto. These ETFs are simply tools that track the performance of the crypto over time. So if for example, Bitcoin price goes up in the exchanges, these ETFs or ETPs will also track the price. If it goes down, the same thing. Now, because you can buy those in ISAs and SIPs, it means that you can take advantage of the tax exempt status of these protection that you get from them. And the third way of investing in crypto is to buy companies that are involved with mining and in some cases actually have huge reserves of cryptocurrencies. Right, so I'm going to go onto my laptop now and I'm going to share my screen so you can see some examples. So the first way we can't talk about because we're not going to go into a personal crypto wallet or using a Bitcoin or a blockchain solution. So we're going to use purely a stock market in this case. So the second way of doing it, like I explained, is to buy cryptocurrency ETFs or ETPs. So we're going to do ETPs first. These are exchange traded products, and These can track either individual coins such as Bitcoin and Ethereum, or you can have ETFs that have a bundle of them all put together. So we'll look at some examples. So if you go onto your favorite trading platform, in this case I'm using Trading 212 simply because it's the easiest one and it's commission free, so it's the one I choose to use. There are so many out there: Interactive Brokers, AJ Bells, Hargreaves Lansdown. Do your research, pick one that you find the best for yourself, and all I can say is try keep the fees down as low as possible. If you can get free commission, even better. But on Trading 212, if you click on the search option like I just did there, on the left hand side you'll see a number of options. So they've already sorted some of these assets out in different categories. So one of the categories is ETFs, and you see one that says crypto ETNs. So if you click on that, it then gives you a big list of different options there. So you got some here from Wisdom Tree, which is the fund manager, iShares, 21 shares, and so on and so forth. So these are companies that own crypto and they've bundled them all together, and you can actually buy the shares of these companies, and by default you're then also invested in the assets that they own, that they have exposure to. Alternatively, if you're looking for a specific coin, say for example Bitcoin, you can just type in Bitcoin like so, and you can see it gives you options of companies and ETFs that have Bitcoin, that are tracking the price of Bitcoin. Or you can do Ethereum, for example, which is another popular coin. So you can see you got physical Ethereum there. So again, these are fund managers that hold Ethereum or Bitcoin, and because they're tracking the prices of Ethereum or Bitcoin, you are exposed to the performance of these assets by proxy. So just to be clear, you don't own Bitcoin, you don't own Ethereum by buying these. All you're doing is tracking them. So the next question is, which one do you go for? Because as you can see, there are so many options there. One of the first thing I do is to go for one in my local currency. Because we're based in the United Kingdom, our local currency here is the pound sterling. So that's one of the main things I go. And the reason being, if you go for one in, say, dollars or euros or a different currency, you're further exposing yourself not just to the performance of the crypto or the coin itself, but also the foreign exchange differential. So if the pound goes up against the dollar, for example, that would have an impact on the performance of your portfolio, and vice versa. If the pound went down against the dollar, for example, or the euro, there would be an effect. So to kind of mitigate that, to cancel that altogether, I try to stick to my local currency, which is in pound sterling. Obviously, if you're in America, you might want to stick to one in dollar. If you're in the Eurozone, you might want something in euros, and so on and so forth. So the next thing I want to do is to go on to my trusted Just ETF website. And the reason being, this gives you a lot of tools in order to be able to sort things out, and you can see different information that you won't get on Trading 212 easily without going into each one. So as you can see, I've just typed in Bitcoin in there, and you just search that, and that gives you the different options. So in this case, you got 6 there. Okay, so the next thing I try to do is to sort them out by total expense ratio. So because these are put in funds, so the fund manager will put all these assets, in this case Bitcoin, into a portfolio. He's then responsible, or she's then responsible for managing that portfolio. So kicking some out, buying more, getting rid of some, and so on and so forth. And for that reason, they charge a fee for their services. That's called the total expense ratio. So because they're tracking the same things, you will find that the performances will be similar. So in my mind, there isn't any real difference in the jobs they're doing. So there's no real reason to pay more if you're going to get similar kind of performance. So as a result, I just go by lowest total expense ratio to highest. That's not the only thing I look at, but that's the first place. So that puts this Bitwise Bitcoin ETP first. Now, the next thing I look at is the performance. So as you can see, that's the best performing one out of all of them so far. But I then look at the size of the fund itself. The reason I look at the size of the fund is liquidity. So if you want to buy and sell these, if you don't have many people invested in the fund, it might maybe make it difficult when you come to buy and sell them. That is not necessarily the case, but it's just one of the reasons I look at that. So if you look at this is actually one of the smallest ones there. So that might put some people off, depending on your the way you look at things. But for me, because it's an ETP, they're also tracking the performance of Bitcoin. It doesn't really matter for me. So as you can see, that's 0.05% total expense ratio. What that means is for every £10,000 you invest, the fund manager will charge you £5. And if you compare that with this one, which is 2%, in this case, for every £10,000, you're paying £20. Now you're paying 4 times more for basically the same exact tracking the same thing. And if you then look at the performance, this is actually the worst performing one. So why are you paying 4 times more? It doesn't make sense to me. Now, if you notice here, it says accumulating. Because of the nature of crypto, they're not going to pay you out dividends. So the performance, whatever increase you get or decrease, will actually just accumulate. They won't be paying you out. They'll just use it to increase the holdings you have in the ETF or the ETN. And if you look further on, it says physically backed. That means that these funds actually hold the underlying assets, in this case Bitcoin. We can do something similar. You can look at Ethereum, for example. So if that's a different coin which is separate from Bitcoin. If it's Ethereum you're looking for example, you can do the same, and then it gives you the different options again. So you got one there from 21 shares, Wisdom Tree, Bitwise, and so on. So again, you can just sort those into total expense ratio. You can see that the performances of the funds are similar, but there are slight differences because it just depends how closely they match the performance of the underlying asset, in this case Ethereum. So again, you can see the total expense ratios range from 0.1% all the way to 1.49%. And if you then look at the performance, you can see that that's 0.1% and that's 0.35. So that's 3.5 times more than the fee that this one is charging. But if you look, there's a slight difference in the performance of the fund. So that's doing slightly better than that. But your question is it doing 3.5 times better? I don't know. So in my mind, I can't justify paying 3.5 times more if the performances are not so different. So next thing, like I said previously, you look at the fund size and you can see that that's the smallest one, which can be a problem in some cases. And you can look at the others. This one is substantially bigger, so 21 shares is bigger, but look at that, 1.49. So that might be an issue. Right, so I'll just take this one as an example. So you can just click on that, and then this gives you a bit more information. So first of all, it gives you an overview and a description there. So if you just expand that, it tells you a little bit more about that particular coin. So in this case, it says this product tracks the value of cryptocurrency Ethereum. So that's this particular coin. The total expense ratio is 0.1 per annum, and it tells you that this is the cheapest that tracks Ethereum index. It also tells you that it replicates the performance of the underlying index, and it's backed by physical holdings. So that means that they actually hold Ethereum. And it's also telling you here that it's a small ETN, exchange traded note, with 62 million. So it's not tiny, it's just small compared to the other ones. And it was launched in 2022 and is domiciled in Switzerland, so that's where it's based. If you scroll a little bit further, you can see the charts and you can see some basic information there. So we've talked about the investment focus, so in this case cryptocurrency. You see the fund size, the expense ratio, physically backed, ETN, exchange traded notes. Strategy, it's long only, so you're not betting against Ethereum, you're betting for Ethereum, so it's long. So if it says short only, that means you're doing in the inverse. That means you're backing against Ethereum. It tells you the currency, in this case USD, currency risk, unhedged, so that's that movement I'm talking about. So if that's going to be a problem for you, then don't go for that one, go for one in your local currency. And it tells you where it's domiciled, it tells you the fund provider there. If you scroll a little bit more, you can see the performance. So year to date, that's down by 0.1%. Crypto has actually struggled a bit so far this year. 1 month is down 16.78, and you can see the 6 months, 3 months, 5 years, and so on and so forth. It tells you the risk. Now, crypto by nature is very volatile. That means that the price goes up and down a lot. So one day you could be up by so much, and then by the end of the day you can be down by so much as well. So that's another thing you need to bear in mind. So you need to know your risk tolerance, and you need to know if this is kind of risk that you're happy with for the prices to move very frequently and constantly. So this just tells you a little bit more about the exchange, the stock exchange that it's listed on, and it just gives you different other options. So this is just ETF doing a lot of the heavy lifting for you. So if you're happy with that, you can then just go back to your to the platform that you're using, the trading platform, and you see that it says the ticker, so that's a unique symbol for that fund. So you type in ETHC and you can see it's right there. So if you click on that, so this one is the pound sterling version of that, and you can see the performance. You can see what it's done over the past day, past week, past month, 3 months, 1 year, and max. So if you're happy to go with that, for example, all you do is click on buy, and now it gives you, before you can go past this bit, it would give you a number of different tests. So it'll ask you some questions to test your knowledge of the asset you're trying to invest in. So in this case, crypto. So it's in the form of some multiple choice questions. Now, if you don't know enough and you don't pass that test, then they won't let you invest in it. So I did that test before we started filming, so you can see that it's giving me the permission to carry on. Also, when you finish that test, it won't allow you to do so immediately. So there's a cooling off period, so it gives you time to think, to make sure that you're still happy with that decision. So I've done all that, I've given it the time, I've passed the test, so I'll just click on confirm like so. So now all you do is to type in how much you want to invest and the way you want to invest. Obviously this is on a laptop, so the layer might be different compared to on a mobile phone. Also, if you're using a different platform, say you're using AJ Bell, the layout will be a bit different, but the options will be similar. So there will be a buy button somewhere, and then it gives you 4 options. So you got market, limit, stop, or stop limit. Now market means it'll find you the closest price to the current screen price. So it's currently £9.74 per share. It doesn't mean you'll get exactly £9.74. It just means that you'll try to find it as close as possible to that. So it might be £9.75 or £9.76 or even £10, who knows. But by doing this, you're letting the computer take control to go look for the different options for you. And also, once you've done that, you can just use that slider like I did, or you can just use the keypad, and that allows you to just type in what you want to type. So I just put £1 for example. So because Trading 212 allow fractional shares, instead of having the full £9.74 for one full share, it'll give you a decimal or fractional amount of shares that's equal to £1 worth. So you just click on review order, and then this is saying to you again, make sure you acknowledge that you're happy with the risk, because crypto can be quite volatile. So it gives you a summary now. It tells you the order type, market, share value £1, number of shares approximately 0.1. Commission is free because it's Trading 212. Some platforms will charge you, and it gives you the total amount. So that's £1. So all you do now is to click on send buy order, and that's gone. Now we're filming out of when the market is closed, so that means that that order will sit there until the market reopens in the morning. That's in 12 hours and 32 minutes time, to be more precise. And once it opens, the system will go to work trying to find the best option for you. So that means that you're leaving yourself in the hands of the system to find you the best or the closest price to what's being shown on the screen. Now, if you wake up in the morning and the price of this particular fund has gone up to say £10, then it will execute at £10. If it goes up to £20, it'll execute at £20 or thereabouts. So if you want to mitigate this, you can use a limit buy instead. So you can use the slider here to move across the amount you want to spend. So for example, you want to put £1.07, and then now you get to tell the system the maximum you want to spend, the maximum price you're willing to pay. So instead of £9.74, if you want to pay no more than, say, I don't know, £9.50, for example, you can actually set that, and you get this summary box again. So it tells you the limit buy, it tells you the number of shares, it tells you the value, the price that you set. So that's the maximum price that you're telling the system you're willing to pay. It tells you the expiration. So if this was during market hours, you can change that to end of day. So it means you'll keep trying till the market closes on the day. It tells you the commission again and the total value. So this means that if this price stays at £9.74, it won't execute until the price drops down to the price you've set. If it goes any higher, it won't execute. If it drops, then it will participate. You'll be able to get the price at the new price lower, but not higher than that price set. So you send your buy order, and that's it. You send the order there. So once that's executed, either you use the market or the limit, then you'd be a proud investor in an ETN or an ETP or an ETC that's tracking the performance of that particular one. It's the same principle. So if you don't want to buy a particular coin, so not just Bitcoin or Ethereum, but a combination of different cryptocurrencies, you can use the ETN instead. So similar kind of process. So you use the just ETF to screen it, see if you're happy with it. So if, for example, you want to buy the blockchain, so you can type in blockchain here, and you can see this is an example of a fund that doesn't just track one coin but a number of coins. So this Vanek Crypto and Blockchain Innovators Fund, for example, does that. So again, you can check the different performances. You can see 1 day, 1 week, 3 months, and so on. So you can see cryptocurrency in general has had a torrid month or so, but overall they're doing well at around 32% up for the year. So similarly, you go on just ETF, you type that in, check out the performance. So DAGB, you can type that in there, DAGB for example, and you can have a quick look in there. So you can look at the total expense ratio. So it gives you the summary there again. You can have a quick read on that. Total expense ratio 0.65%. So again, assuming you're happy with that, you go back in there, simply click on buy, you choose market or limit order. So you can just type in the amount you want to invest in there, for example, and review the order, same as what we saw previously. Or you can use a limit if you want to set a minimum price, a maximum price. So you can use the slider, and then you can say I only want to pay, I don't know, no more than £11, and then you review the order, and it's the same process from there. Okay, you get the summary and you send the order. Okay, now the last option, rather than buying a fund that tracks the performance of a coin or the performance of blockchain, what you can do is to invest in companies that actually mine or are involved with crypto. An example would be something like Strategy. So this is a company that's actually mines and has a big reserve of cryptocurrencies, or in this case Bitcoin. So by investing in the stock of this company, you are exposing yourself to the movement of the Bitcoin, which is what they have in reserve. Now, by extension, you're also buying into a company that has its own risks. So this is a company that has its own credit risk. It's got a leadership structure. They may not be running the company well, they may be running it fantastically well. So you're not just exposing yourself just to the Bitcoin or to the cryptocurrency, you're exposing yourself to a real business as well. So if you're happy with that, that's one. An alternative one could be something like, say, Coinbase. So coin there. So similarly, this is an exchange. So this is where you can buy the crypto directly if you wanted to. But they also have exposure, so you can buy the stock of the company, in this case Coinbase, and that'll then give you exposure to crypto in general. And similar process, check them out, check out the performance, make sure you're happy with all the information there. You can see the price, you can see the returns, you can see the number of shares. So this is one I'm currently invested in. So just bear in mind, this is my Roadman Investor portfolio. So this is purely for to allow me to be able to do videos like this. It's not my main portfolio. So you can see the dividend yield. Some companies would pay a dividend, but because it's crypto, that's not going to be the case. You can see the PE ratio, you can see the average volumes. So you need to check all this out. If you scroll to the bottom, you can actually read a bit more info on the actual company itself. So it tells you the name of the CEO, it tells you the number of employees, where it's based. You can look at the sector, you can read a little bit about it. So provide financial infrastructure and technology for crypto economy, and so on. So if you're happy with this, you can actually invest in a company that's heavily invested in crypto, and as a proxy, you're also then involved in the crypto investment itself. So the process is exactly the same from this point. Market or limit, and then you just send the buy, and that's it. So if you're happy with all that, you just need to make sure that you bear in mind that cryptocurrency is a very volatile product. It's giving very good returns, but as you can see, it's also performed poorly recently. So it's not always going to be up, it's not always going to be down. Just make sure you're happy with the risk level. So the main ways of buying cryptocurrencies are to either buy them directly from an exchange such as Kraken or Coinbase, or you can buy an ETN or an ETF that tracks the performance of that particular coin, or you can buy one that bundles a bunch of them together. So instead of just buying Bitcoin or just Ethereum, you can buy an ETF that bundles all of them, so you get the performance of all of them as an aggregate. Or you can buy companies that either mine them or have huge reserves of them, or are heavily involved with the way that they're run. So you expose yourself to not only the price or the performance of the crypto, but also an actual company. The advantage of buying an ETN or an ETF is that you can buy them inside your ISA or your SIP, your self-invested personal pension, and these are products that screen you from tax. So any returns you make from that, you don't have to pay capital gains tax, you don't have to pay any income tax. It's completely tax-free for you. Versus if you bought directly from the exchange, yes, you own the actual crypto if you bought it directly from the exchange, but any gains you make from there, you'll have to pay tax on. A lot of people are not aware of this, but that's definitely the case. So I hope this helps someone. I hope you're happy with that. If you're invested in any cryptocurrencies, leave a comment below, let us know which ones. If you're invested directly, or if you buy ETFs or ETNs, or if you have exposure to these kind of companies like Coinbase or Strategy, let us know your experience. Give us some pointers on how you manage both. Is there a difference in the way that they perform? Leave some comments below. Don't forget to like, don't forget to share, and make sure you click on that notification button so you can get more videos like this in the future. As always, thank you for joining me. It's a Roadman Investor.